All right, let's talk about retirement. We all think about it, probably worry about it a little too much. But what if I told you the way we've all been taught to save for it is just fundamentally broken? Today, we're going to look at your financial future through a totally new lens, one that goes way beyond just saving.
So you're doing everything right? You're disciplined, you put money away every single month, you watch that retirement balance slowly tick up. But then, maybe it's late at night, a little voice creeps in and asks, is this actually going to be enough? If you have ever felt that nagging doubt, then you are in exactly the right place.
Because that feeling has a name. We're calling it the savings anxiety trap. It's that crazy gap between doing the responsible thing and still feeling deep down, totally insecure about how it's all going to turn out.
You know the feeling. You open up your banking app, you see the number. Maybe it's a few thousand, maybe it's even 6 figures. And for just a split second, you feel okay. You think, phew, I'm on track. But then, the mental math kicks in. You start thinking about inflation, healthcare, just the cost of living, and all of a sudden that big reassuring number feels fragile.
And this really gets to the heart of the problem. That old way of thinking, this simple act of saving money, might be giving us a feeling of safety that just doesn't line up with reality anymore. It's basically a false sense of security.
So why? Why does it feel this way? Why is there such a huge disconnect? Well, the truth is, it's because the system we're all playing in it's completely outdated. It was designed for a world that, frankly, doesn't exist anymore.
I mean, just think about the world this whole retirement strategy was built for. We're talking stable, long-term careers, working for one company your whole life. Company pensions were common. Healthcare was way cheaper. Inflation was way lower. And get this, people were only expected to live for maybe 10 or 15 years after they retired. Every single one of those things has been turned on its head. And yet, we're still using the same old playbook. It's crazy.
And if you look at the math, it gets even scarier. So let's say you want to generate a pretty modest $70,000 a year in retirement. Using the classic 4% rule, you'd need a nest egg of around $1.75 million. Okay, but the median savings for people who are actually nearing retirement, it's about $185,000. That gap, it's not a gap, it's a chasm. It just proves the system isn't working for the vast majority of people.
So if the math is so bad, why do we keep doing it? Well, it all comes down to psychology, doesn't it? Our brains just crave certainty, and saving money feels certain. It's predictable, it's simple, and hey, nobody's ever going to tell you you're wrong for being a good saver. But here's the psychological trap. Certainty is not the same thing as progress. Real financial progress, true wealth, doesn't come from just parking your money somewhere. It comes from intentionally building things, building productive assets.
And then you've got the silent killer of wealth, inflation. Even at what seems like a low 3%, your money loses half of its buying power in about 24 years. Think about that. It means if all you're doing is saving, you are guaranteed to be falling behind. It's like you're running on a treadmill and someone is just slowly, constantly turning up the speed.
Okay, so if the old goal of retirement is broken, then what the heck are we supposed to be aiming for? This is where we need a huge mental shift. The goal isn't just to stop working someday. The real and much more powerful goal is what we're going to call optional time.
So what is optional time?
It's simple, really. It's the freedom to choose. It's having the ability to control your own time because your income doesn't depend 100% on you trading your labor for it. Most people don't actually want to sit on a beach and do nothing forever. They just want to stop being trapped by a job they have to do just to pay the bills.
And this really sets up 2 completely different paths you can take. You have saving, which is passive. You're just setting money aside, crossing your fingers, hoping it's going to be enough, all while knowing that one day you'll spend it all the way down to zero. And then you have building. Building is active. It's an intentional process of creating or buying assets that actually produce their own income and can keep on growing.
Okay, so if building is the name of the game, how do we actually play it? Let's get super practical here and break down a simple, actionable framework to help you build that freedom.
And that brings us to what we can call the 3 buckets framework. It's pretty straightforward. Every dollar you have should be flowing into one of these 3 buckets. Bucket 1 is for safety. This is your cash emergency fund, for peace of mind. Bucket 2 is for growth. These are your typical investments, your stocks, ETFs, things that are going to compound over time. Now here's the thing. Most people stop right there. The real key, the game changer, is bucket number 3, income. These are assets that actively spit out cash flow. Think dividends, rental income, profits from a side business. This is the bucket that actually buys your freedom.
Let's make this real with a quick comparison.
You've got person A, the saver. They do great, they work hard, they save up a $1.2 million nest egg. They use the 4% rule, and it gives them $48,000 a year to live on. Okay, now look at person B, the builder. They focus on creating income streams that generate $4,000 a month. That's the exact same 48 grand a year. So, who's in a better position? Well, it's got to be the builder, right? Because their principal, their original investment, is still intact. It can even keep growing.
And this is the absolute critical difference right here. When you live off savings, that pile of money just gets smaller and smaller with every single withdrawal. It's a finite resource. It's like watching a sandcastle get washed away by the tide. But when you live off the income from your assets, the principal, the source of that money, can stay completely intact. Income adapts and continues. Savings just deplete.
Okay, now I know what some of you might be thinking. This sounds awesome, but I'm just trying to make ends meet here. And look, that's a totally fair point. But the shift we're talking about isn't really about needing a ton more money to get started. It's about changing the direction of the money you already have. It's a shift from that passive savings mindset to an intentional building mindset. And that's something you can do no matter where you're starting from. So, what can you literally do right now? Here are 4 super actionable steps. First, once you've got that emergency fund stable, cap your savings rate. Seriously. Don't just keep saving more to feel responsible. Redirect that extra cash. Second, focus on building just one income-producing skill. Third, every time you think about investing in something, ask yourself, how is this thing eventually going to pay me? And finally, you have to change how you measure your progress.
And this right here is the new all-important question. You need to stop asking, how big is my account? Instead, start asking, how many months of my expenses does my asset income cover? Just shifting to that question, it completely rewires your brain. It changes your financial behavior, your priorities, everything. It focuses you on what actually matters, which is freedom.
Okay, as we start to wrap this up, I really want to talk about risk for a second, because I think the way most of us have been taught to think about financial risk is, well, it's completely backward, especially in the world we live in today.
You know, we're all taught to be afraid of market volatility, right? The ups and downs. But that's not the biggest risk. The biggest risk by far is false certainty. It's that feeling of being safe and secure while you are slowly but surely heading in the wrong direction, following an old plan that's pretty much designed to fail.
Because ultimately, the real goal isn't just a big pile of money. The goal is leverage. It's about getting more out for what you put in. It means leveraging your skills to create more value, leveraging your capital so your money works for you, leveraging your time so you're not always just trading hours for dollars, and building systems so your income doesn't depend on you showing up every single day.
So let's be crystal clear about this. Saving is an absolutely essential tool, but it is not a complete plan. A financial strategy that's just based on one single account and a hopeful withdrawal rate, that's not security. That's a gamble.
And I just want to leave you with this one last thought. When you think about the future, remember this. Your future self isn't just hoping you manage to save enough money. They're counting on you to have built systems. Systems that produce income, systems that create true freedom, and systems that will support them long, long after your day job is gone. So, go start building.